Hi, everyone. Welcome to this analytics tip. We're going to be focusing today on regular savings charts. A lot of users of analytics, when they use analytics, they generally tend to just gravitate to the standard line charting options, which are essentially lump sum line charts. But clearly, a lot of clients aren't going to be investing lump sum on day one. They're going to be regularly putting money away or regularly withdrawing. And therefore, the performance chart and the performance figures they're going to receive and experience is going to be completely different to a lump sum. So, as an example of that, on the left-hand side, I've got this client, Keith Baker Pensions, who's got a retirement contract, and clearly most retirement contracts, you're going to be regularly putting money away, not just lump sum on day one. But if I go and create a standard chart on the right-hand side, just a performance line chart over the last 5 years, I get something a little like this. And you can see it's quite volatile. So we've got the COVID crash at the very start there. So we absolutely crater 20%, and then the recovery, and then the bull run, and then suddenly we crater again, and then we come back and stagnate. So we've got a bit of all flavors in one chart, but it's like a roller coaster, up and down, very volatile. And over the course of that 5 year period, the clients received about 7% return, primarily because they lost so much in those early years. But when I show that to the client, it looks quite volatile, looks quite scary. But actually, that's probably not what they've experienced because they've been regularly putting money away. So you can test that theory and actually show them charts that relate more to their experience, and it will probably have more of an effect as well. So if I close this down and come back to the main screen, on the left-hand side under chart type, you've got all these different types of charts, but if you click on regular savings chart, you can run exactly that. So I'll do exactly the same time period as before. We're going to run a regular savings chart over a monthly basis. You can put an initial investment in on day one. This case isn't, that's not relevant to this case. I'm just going to leave that blank. And we're just going to say £500, euros, dollars, whatever you're working with in there. And if I click on generate chart, it does exactly that. And you'll see the image is now completely different. Still the same time period, still the same crash and everything else. But because we're regularly putting money away, you get that pound cost averaging, dollar cost averaging, euro cost averaging, again, whatever currency you're working with. And you get that nice smooth journey. And suddenly it's not so scary anymore. And at the very top there, we can say, well, look, you invest £500 every month, Mr. and Mrs. Klein. In total, you would have put 30,000 into that pot. And at the very bottom there, it's worth about 31,919. So it's a completely different calculation. Therefore, it's not 6.99%. It will be something completely different. But it's just a nice way of educating clients on the value of pound cost averaging, the idea that, okay, when the markets crash, that's absolutely fine, Mr. and Mrs. Client, because you're going to be buying units at that price. And when it rallies and goes high, you're going to be buying at that price as well. So on aggregate over a long arc of time, you'll get a lot smoother ride over the course of your investment. So that's regulars, but equally on analytics on the left hand side, you've got all these sectors and market indices, and it therefore provides a treasure trove of data for you to go and spin up some much more relevant and suitable content, not necessarily just make it client specific, but equally when we're thinking about creating a blog post or a social media feed. Because you'll notice under the sectors tab, pretty much every sector will go back to the late 80s or early 90s, and the market index data as well. You'll find indices in here that go back to the 70s or the 60s. So I can now create some really long-term performance charts to educate clients in terms of what different asset classes do. So just to give you a couple of examples of this, this is showing me the average mixed investment fund since 1990. So we're talking about over 30 years worth of performance. And this would be quite useful if I'm talking to a client about investing into a particular fund. That fund might only be 3 or 4 years old. So clearly I can't go back 20, 30 years, but I can just show what the average fund would have done, Mr. and Mrs. Klein. Now, we'd like to think we'll be investing in better than average funds and probably lower charges as well. But even if you just do have picked the vanilla fund, Mr. and Mrs. Client, in the mixed or the balanced sector, this is what life would have looked like. £500 every month going in. You would have put in 211,000 in total. At the very bottom there, you can see the values were 687, significantly more than what you've put in. And again, that volatility hasn't been substantial either with those crashes. And I've put RPI in there so we can see what we have to do. We have to keep our head above that green line to actually be making any real gains, because actually it would be worth 410,000 now. So that's just looking at a sector average. I said about the indices as well, though. So this is quite a busy chart, admittedly, but just wanted to show you the different indices you can chart. This again goes back to the mid to late 90s, but you can see in the bottom left there, again, we're just putting £500 a month away, and we would have put in 169,000 in total. But the bottom left there, S&P has obviously rallied over the last few years. That's now well over 1 million. You've got gold price as well. That's going well over 800,000 MSCI World. We've got an index for every single region of the UK and the property values in those regions. So I've just got the overall kind of English house price index in there as well. Got CPI, gilt index, and Bank of England base rate. But we've got other indices that would look at maybe just a 4% return. If I wanted to chart that will go back to the 70s. And equally, most of these indices as well, we've got, say, Bank of England base rate +1, +2, +3%, etc. So as I said, anything kind of trending in the industry at the moment, whether it's gold, whether it's house prices, whether it's inflation, you'll always find something within analytics to spin up some content, specifically for social media, or maybe like a market commentary you're trying to create for clients. And just lastly, there's a feature within analytics. There is a tip on this on our YouTube channel, but there's a feature in analytics that allows you to take a portfolio and will create a benchmark for you. So this is Keith Baker's benchmark, and how it works is it would just simply take all of the sector averages and aggregate them together. So if Keith's got a simple example, maybe Keith in his portfolio has got a UK fund, a US fund, and a European fund. Well, the system would just simply go and take the UK sector, the US sector, and the European sector, smash it together, give the appropriate percentage split dependent on how he's invested in those funds. And then because you've got that aggregated sector average benchmark, that will then presumably go back as far as the sectors will. And as I said, most of the sectors go back to the late 80s, early 90s. So I can show Keith that, well, look, I could have just shown you the sector average performance of the balanced sector or the mixed investment sector, but this is much more relevant to your portfolio. And this is now showing you aggregating all together. This is what the average of those funds would have done all the way back to the 90s, 30 odd years. And again, if we were to put £500 a month every month away, you would have put 180 in total. And that's the value at the very bottom there. So just bear that in mind when you're using analytics. Obviously the lump sum line charts are incredibly useful for various different scenarios, but when you have got clients and circumstances where you want to try and chart what life looks like with a regular investment going in every month, every quarter, every year, etc., that's where you'll find it. Over on the, let's minimize these, over on the right hand side under charts, regular savings charts, and then type in the logic, click on generate, and you'll create that content